Hey there, random internet strangers. It's Random Crypto Guy with the dollar cost average beast mode signal. Today is Sunday, June 20th, 2021 at 5:28 Eastern Standard Time, and the signals are as follows. You can always find these signals in the pinned tweet I've changed my name now. It's random hashtag Bitcoin Guy. Forex Random. I've been radicalized to be a Bitcoin maximalist over the past few days. I have seen the light, and but I will continue to give signals for both Bitcoin and Ethereum. I think Ethereum might have its place still in the overall scheme of things, but with the El Salvador news, and now I believe it's Tonga, country in Africa, is also considering similar legislation that El Salvador's considering to up their GDP by recapturing the remittance fees that Western Union and the banks and all, everybody's got to get their greedy hands on the money for remittance payments, and this will allow those countries to recapture those funds that are stolen by the banks. So I see that trend continuing very quickly and rapidly in the not so distant future. And so I'm seeing some really positive signs out there that the next couple of months are going to turn things around. However, I'll get into the details of that in the charts towards the end of the video. So let's get right into it, to the signal. Let me go ahead and pull that up. And the dollar cost average beast mode, Sunday, June 20th, 2021 at 5 p.m. Eastern Standard Time. The DCA for Bitcoin is 50.1%. That means whatever your DCA is, you are going to take 50.1% and purchase Bitcoin with that today. The buy the dip escrow is 49.9%. What that means is that you are going to take what's left over of your dollar cost average and keep that in a stable coin to buy dips when they do happen. And the all-in signal, this bucket is for buying crashes, and currently I thought we might start seeing an uptick in the all-in signal, but that hasn't happened as of yet. It's a lot harder to get all-in bucket fills in a bear market, which we've been in for a couple weeks now. So that signal is zero. So you'll see that 51.1% plus 49.9%, that's 100% of your DCA that will go into the two buckets. One for purchasing Bitcoin today, one is to buy the dip. For Ethereum, it's 53.4% is your DCA. That means you are going to take whatever your DCA is and take 53.4% of that and purchase Ethereum with it today. The remaining 46.6% you are going to put into a stable coin and hold it and wait to buy a real dip, not these little tiny range bound price action that we are currently in. And I'll get deeper into that when we hit the charts. And the all-in for Ethereum is also zero. So couple of things. First off, if you are just beginning watching this, what we do here at Dollar Cost Average Beast Mode is lower the average of our dollar cost average by buying dips and crashes when they do occur. And we do this by setting aside a percentage of our dollar cost average, which is based on price action and what price action is doing at the current time. So a lot of people, they'll come into the market and they'll have a large chunk of change that they wish to purchase Bitcoin with. But they don't want to buy at the top. You don't want to buy when prices are rallying. You want to buy when prices are dipping. So what you can do with that is to distribute it between the buy the dip fund and the all-in fund. These are buckets, and if you use a company like BlockFi, you can earn interest on your dollars by keeping it in stable funds when you set aside this money to purchase dips and purchase crashes. So and so, like I said, it's 3 buckets. We have our DCA bucket. That's how much we're purchasing today. And I'll get into some examples here in a minute. The buy the dip bucket is for purchasing dips, and the all-in bucket is for purchasing crashes. And so, like I said, if you have a large amount of money, I'm not a financial advisor, but if you have a large amount of money, you want to buy Bitcoin with it. You want to purchase it at depressed prices. You do not want to purchase them when prices are rallying. So by setting it aside into either buy the dip fund, the all-in fund, or a percentage mix between the two, that is entirely up to you how you would do that. So that's what we recommend at dollar cost average beast mode. So moving on, let's go to the examples and pull up the calculator here and show you how we calculate this. Okay, for Bitcoin, what I like to do is your dollar cost average is going to be different for everybody. You know, maybe you can only do $20 a week. Maybe you're rich and you can do $10,000 a week. This will work no matter what your amount is. When you get to the smaller amounts, there's some adjustments that you might have to make. But in general, what I like to do is use $100 as our dollar cost average. It makes the math simple. I've done all the hard math for you to get the percentages. You get to do the easy part. So for the dollar cost average for Bitcoin is 50.1%. So in our examples, I like to use $100. So you have $100 a week that you can purchase Bitcoin with, or you dollar cost average in with. So we take our 100 times 50.1%, and that equals $50.10. So that's what you would take of your dollar cost average and purchase Bitcoin with it today. Because if the market goes up, we still want to be in the market, but we don't want to put all our eggs in the basket if the market goes down. If further continues to go down, that's why we hold back some dollars to purchase at a lower price. That's what we're always looking for. So moving that along, we'll clear that out. And the buy the dip fund is 49.9%. So that's $100 times 49.9% equals $49.90. And you can see that totals up to $100. I'll get to the all-in signal in a minute and what that means. So what you're going to do with this money is you are going to set this aside in a stable coin, whether it be dollars or euros or whatever you use. Most likely it's going to be dollars. And if you use a company like BlockFi, what I do is that I get my money in GUSD and BlockFi, and then I'll divide it up into different stablecoin funds so that I can keep these accounts segregated so I don't get confused as which is which. And I use USDC, which is Coinbase's stablecoin, to store my buy the dip fund for Bitcoin. So that's what I would do, is I'd put $49.90 into USDC. So let's clear that out. Now the all-in signal is 0, and it's been 0 or down in the low digits or 0 for a while because we are in a bear market, and that means we got really close to an all-in signal with this past dump a few weeks ago. Actually, it's been about a month now, but that dump, it was close to an all-in signal, but we didn't quite reach it. It was just a few percentage points off to where it would have been considered a crash and not a correction. and they need to do some serious damage in order to do that. But if that does happen, that means that the prices have fully been suppressed and very, very, very far away from the average price. So that's a great opportunity to buy. You want to buy when there's blood in the streets. When everybody's panicking and selling, that's when you want to really start scooping up the bargains. When you think about it, when you buy a refrigerator, do you wait till you buy it on sale, or do you wait until the price goes up and buy it? You think, oh my God, the refrigerator price is going up, I better buy some. No, you wait for it to go on price on sale. Investing is no different. Now, trading, it's different, but with investing, that's what we want to do. But as I've said, when we get into bear markets, these all-in signals get very suppressed. So it's 0% right now. And as I spoke earlier, if you have a large sum of money, might be a good idea to put that money aside into an all-in account. I'm not a financial advisor. This is not financial advice. This is just what I'm doing, sharing what I'm doing. And if you like what I'm doing, that's great. If you don't, you think I'm an idiot, that's okay too. I don't give a shit. Because God, cost average beast mode doesn't give a shit either. So, moving on. We know that's zero, so I won't go over that. 0 times 100% is 0. So $100 is 0. We know that. Everybody knows that. So let's move on to Ethereum. So Ethereum, the DCA is 53.4%. So we take our $100. It could be different for you. It could be $20. It could be, maybe you take 10% of your paycheck, and your paycheck is, that 10% is $172.47. It works out to be, the math works out to be that way. Just whatever you decide to do, so that to put into the dollar cost average. So, but our example, we use 100. So 100 times 53.4%, 3.4% equals $53.40. So that's what we were going to purchase Ethereum today. We're going to purchase that amount, $53.40, or 53.4% of whatever your DCA is. By the dip fund is 46.6%. So we take our $100 times 46.6%. That equals $46.60. So we'll set that aside, and if I use BlockFi, and for this account I use BUSD or Binance Coin. That's where I would put that percentage, so that it'll segregate it from the USDC that I have to buy the dips. For the Bitcoin, I use BUSD, which is the Binance US dollar, to purchase Ethereum when it dips down, and we purchase it that way. So that's how these signals work. And of course, the all-in signal, I've already over-explained it. When we are in bear markets, these get suppressed, and hopefully we've filled up that bucket during the bull runs when prices are screaming, and that's when all-in signals get really high, when prices and we're in a bull market, when we're on a tear. That's when we start filling up our all-in bucket. But right now we're getting close. We're so close to that all-in signal that we're not putting any more money into that bucket. So that's just something to keep in mind. It's just how the system works. So moving on. Let's go to the charts. I want to start off with Dixie today because something very interesting happened. There's a thing called reverse repos, and what that is the repo market is the interbank market where banks lend and borrow from each other, and sometimes either there's no money in the market and it freezes up, and that destroys Dixie. This is the dollar. The Dixie is a comparison of the US dollar versus a basket of other currencies, and so that destroys the dollar, and that's what happens. We see these downtrends that the dollar is weakening against the other currencies. So And what that means is that there's more dollars getting flooded into the market. What a reverse repo is that instead of the Fed injecting dollars into the system, the Fed is pulling dollars out of the system and lending out treasuries to the banks so that the banks have reserves to lend out money against. So instead, usually it's the other way around, that the regular market is, whether it's the Fed or whether it's one bank against another bank, they'll lend collateral in the form of treasuries or mortgage-backed securities, and they will get dollars for it. So, but the opposite has happened. That pushes more money into the market. When now they're trying to take it out, and the reason I believe this is happening, I'm not real sure about this, but the reason I believe this is happening is because there's a bunch of expiries that happen this week, or it was either happen Friday or it's going to happen this week. I'm still kind of not sure exactly what's going to happen, but what that's going to do is that's going to flood money into the market. When these options expire, there's going to be all this cash in the market, and so I think the Fed is front running it by doing the reverse repo purchase to pull that money and absorb it like a sponge out of the market and lend treasuries, because the treasuries don't affect the inflation rate or how many dollars are out into the market. That's what I believe is happening. Now, I'm not, just from my research, I'm not actually 100% sure. I'm just a schmuck with a microphone and sharing a screen and sharing what I'm doing. So, take what I say with a grain of salt, but that, from my research, that's what I believe is happening. And you can see, as a result, the Dixie has shot up. And when this goes up, that means all the markets go down, because all the markets are measured by the USD. And USD, the Dixie, is basically a measurement of how many dollars are being pumped into the system or taken out of the system. And that's what you think of it. I mean, it is a little bit more complex than that, because the euro is pretty heavily weighted. So the euro can also affect this as well. But in general, if you think about it in just real black and white terms, the Dixie, if they're pulling money out of the system, that means that there's less dollars in circulation, and so that increases the value. Now, it didn't increase it like huge amounts like Bitcoin. It only increases it by over this week it increased a couple bucks. Went from, we opened at 90 and a half and 92 and a quarter. So a little well, not quite $2, I think, if my mental math is correct. But that's what I believe happened. I think they call this the Four Witches or something like that, and I just think that they're front running that. So, and it also, you can see we still haven't crashed through this area. This area is pretty stubborn, and it popped way up. So, we still might see a lot of sideways action here in the coming months. If this is sideways, then the markets are going to stay sideways. You can see how this affects gold. Basically the inverse. Because gold is very supply and demand heavy, just like Bitcoin is, but the Bitcoin is more affected, reacts more to the stock market than to the price of metals. This silver, same thing. We hit that thin red line and then crashed back down big time. Let's see, is this the right one? Yeah. So daily, and then here's Bitcoin. See, it didn't affect. Well, this is the daily, so it did crash down during the week. But let's look at the weekly. Not so much, and we got a much bigger bounce off of this supply level. Much bigger bounce. So you can see the beaks are dipping into the nectar here of this demand level. I'm sorry, I said supply earlier. This is a demand level. If we go down to the daily, you can see how nested and strong this demand level is. And you can see the beaks of the hummingbirds dipping their beaks into the nectar and then flying off in the opposite direction. And then it's happening the same thing up here in this orange box that I keep talking about, and how difficult this is going to get through. This orange box right here, this is a turncoat supply. It was a demand level that got crushed, and now it's become supply. And these are when it's early, these are very difficult to get through. As time wears on, if this holds up, this will eventually give out and we'll start seeing a bull market again. So if we continue to see buyers, I know for a fact there's some rich people down here into the low part of this. You can see this big bounce right here this day. This is where people were buying, right at 30 grand. So right here, monthly support. This is the area where there's a lot of sharks, a lot of big money is waiting, I guarantee you. And then there's more down. I know Robert Kiyosaki has said that he's waiting for, confirmation from, but he's at 25. He has limit order set at 25. So that's kind of like halfway in between that and the next level down here. So you can see that it's still stacked, but there's no nested levels until we get down in here around 20 grand. So if this level breaks, which it's still very strong, this is where I expect bounces here, and then coming down into this level to where we'll stabilize down here around 17. So that's what I'm expecting, is a bounce down. That's if this breaks. If this doesn't break and we break through this part, this orange box, this first orange box, we should be all right. This will become the new pivot, and then we'll start ranging in here and then eventually take off. So that's what we're looking at right now. And the more sideways we go, the better. That means that more people are just waiting to scoop up at this level. So we're waiting. It's more of a wait and see game, but here at dollar cost average beast mode, we don't give a fuck. We know when we have to. The percentage tells us to buy when prices are suppressed, and we buy more, and we hodl. This is a hodler system. It is an investment system, and it just allows you to lower the average of your dollar cost average and hodl, and we're over the long term. And we take a look at Ethereum. Ethereum is really dropped off on. They're really getting some sell pressure. You can see the trend line here has really gotten down into a lower level, and the volatility is starting to decrease as well. That means that there's not a lot of activity going on there. A lot of people probably pulling out, probably scared, and either going into dollars or going into Bitcoin. But the alt market in general is, there's a few unicorns out there, but overall, I don't have a lot of faith in general about what's happening, and I got a lot more faith in what's happening with Bitcoin, with these remittance payments between El Salvador and Tonga, and I think those are just first of many dominoes to fall here within the next six to 12 months. As I said, I'm a long-term investor in Bitcoin. I'm not a trader. I do not trade Bitcoin. This is an investment strategy. So I think that's it. To recap, we'll pull this up here, dollar cost average beast mode. You can read it for yourself. You can go back and look at the calculations to see how we calculate that, and please click like and subscribe to support the channel if you like what you see here. I try to make it very simple and try to take these complex things and make them very simple so the average Joe can understand what's going on and what's happening with the markets. I've spent years just studying this stuff. I'm such a nerd when it comes to this stuff, and so, take what I have with a grain of salt. Nothing I say is financial advice. I'm just telling you what I'm doing. If you think it's pretty cool, you can do it too. So thanks for stopping by.